welcome to the Closing Beat, everybody. Happy Wednesday. How's it going out there? Good, I hope. Quick show we're doing here. Talk about the stock market. We're going to cover all the good stuff today. Got some interesting stats for you as well, so stick around. We're going to go through all the good stuff as we like to do. We're financial advisors here at Jazz Wealth. Hope you check us out at jazzwealth.com. If not, the best, you can check it out, but if you can't, you don't want to, at least go play our game. It's called Guess the Dow. Go to the website there, bottom right-hand corner of your page. Tell us where you think the Dow is going to close next week. If you're the closest without going over, you don't have to buy anything. You don't have to do anything. No email list, no spam, no marketing, no nothing. If you're the closest, we'll send you a $100 gift card. Or if you're one of our customers, we'll give you a $100 credit to your account if you'd like. You can take the gift card too, by the way. You don't have to take the credit, but a lot of people take the credit. Understand that. Marcus Miller is our Jazz Artist of the Week. He's got a song called Blast. It grows on you. It's not the best. It grows on you. I like it. But anyways, hell of a bass player if you want to check that out. Let's talk about the stock market today. You lost 516 points on the Dow. You got 50 points lower on the S&P, and the NASDAQ down 1.5%. We are closing in on, and we'll just pop over here real quick. We are closing in on down about 5% for the week. Not there yet. At lows today, we were almost there. We're getting there, right? So we got a little bit more to go. We're still in the chop zone, back and forth, Christmas tree type trading, back and forth and back and forth. The markets don't want to really go any higher. They don't really seem to want to sell off in any aggressive way. They like this range where we're at here. You got about 2,800 on the S&P to 2,950. That's kind of your range. That's where we're stuck here at the moment. The Fed came out today and said there are significant downside risks, and we are not interested in negative rates for now. They threw in the for now to let you know it's not off the table. Everybody just dissected that for now. How did he say it? When did he put it in the sentence? How have they said it in the past? Seriously, I'm not kidding. Anyways, negative interest rates, like them or hate them, let me know in the comments below. But as of now, the Fed says, no, we want to use all of our other tools, and we want Congress to get on and, quit spending money. I agree. And, we'll deal with that part later. So no negative interest rates there. You also had a ton of different analysts come out today and say the risk to reward is just not favorable. Last Thursday in the dojo. Go ahead, if you're one of our customers, click on this chart, this picture right here, which will take you to a video that we covered last Thursday for our customers. I said the exact same thing. However, I don't like to tell people, oh, I told you so, right? But we actually went through the probabilities, right, of the markets moving higher versus lower and ran some scenarios there. So while all the other analysts you see on TV, they say risk to reward is skewed to the downside at the moment, we actually took it a step further and said, what are the numbers that they're looking at? What are the probabilities they're assigning to it? And how can we give you guys the same? So really, really cool there. All they're basically saying is, what's the chance we go higher and just keep going versus fall and come back to the lows? And they're basically just saying the chances of us going lower are much greater than if we go higher. And they're actually spot on there. So something you can check out if you're one of our customers there. All right, as far as the markets go, you see the S&P on the screen here today, but the NASDAQ was actually the strongest. Go figure. Your tech stocks, they were down today. Most of the FANG plus Microsoft was down on the day. However, the NASDAQ is the strongest. If you look inside the NASDAQ 100, you're going to find Zoom, one of the better performers here today, 3.79% to the upside. It's just a popular name right now with everything going on. And Regeneron Pharmaceuticals did hit 52-week highs and finished higher by 3.5% on the day. Those are your upside standouts in the NASDAQ 100. If we look to the downside there, you're going to find semiconductors. You're going to find Texas Instruments down 2.3% on the day. Micron down on the day 4.7% as well, and United Airlines. Those are your notable downside names in the NASDAQ 100 if you're looking. United, it's 9% to the downside there. We'll cover the airlines here in just a second. Russell 2000 was the weakest out of the group there. It lost over 2.5% on the day. Chegg tried to hold everything up. Chegg was up 4.6% on the day. It is your best gainer with the highest weighting in the Russell 2000. So they tried to do what it could do there. You had United Foods as well. Man, 45% gain all in one day. Strong earnings on that one, by the way. If you look at their earnings up 54%, revenues up 12%. Just killing it. It's a food distributor, if you're curious what they do there. But they did really, really well. And so that helped. It helped hold up some of the Russell there with some of those big names, and that's where we were at there. A couple more things, and I'll share some data with you here. Like I said, most of the FANG names lower on the day. Facebook down 2.5%. Microsoft's the one we've been adding to the mix, 1.5% to the downside. They've been your leaders to the upside. I've said it for weeks now. What happens when they take a break? you're seeing it. You get a little pullback in the market. It's not a scary thing, not a bad thing. It's just not, it's what happens. Also today, the banks, oh man, these banks, they just didn't come to play along today. I'll cover that in the sector breakdown here in a second, but banks down on the day. Tech basically has been pulling against the grain of financials, and today, and actually over the last 2 days, tech has come to meet the financials in terms of pulling back. So it's not good. The big guy's taking a break, and nobody else wants to help row the boat, if you saw our show yesterday there. Anyways, let's take a look at something here before we get started. Should you sell in May? Should you do the whole sell in May and go away thing? We've got the S&P here on the screen. You've seen the rally. It's a good rally. We had a big scary drop to begin the year. Now we're going into May, and everybody says, sell in May and go away until Labor Day. That is the phrase. You'll never forget it. You're going to hear it a million times if you haven't already. So we give you a little sneak peek into what we do with our customers in terms of increased data or more detailed data. I'm going to hop over there real quick for you. Let's get to it. Which way are we going to go in May? Here's the performance since 1951. Every single May's percentage returns since 1951. And you can see basically just by looking at the chart real quick, it's a coin flip, right? You got some higher, some lower. There's no obvious move to the upside like April had. We showed that last month. And so, look, it's like, okay, we're starting the sloshing of the sell in May, possibly. We'll take it a step further in a second. It's only positive 58.6% of the time with the data that we're showing. Average return is a gain of 0.17%. Here's the thing. In the background, you see that moving average? Put a moving average on the chart. That's fancy, right? Come on now. You see that on TV. Moving average over the last 10 years. It's a 10-year moving average. You can see we've got a decline in terms of May's performance. So over the last 10 years, we've been in a really strong bull market, right? Well, we were. Everything was really good. However, May's performance has been going against the grain. We've actually been negative more times than positive. About a 2% average decline over the last 10 years, which is interesting, I thought. So we want to point that out to you. Let's take it a step further here. This week, meaning this Monday through Friday, ranks in the bottom, the 11th percentile out of all the weeks in the 52-week year, right? So it ranks as one of the worst weeks in terms of median performance, has a loss of 0.58%. I highlighted it on the chart there for you so you can see, all right, that's every single day over the course of a year, and that's the average performance. Here's how we made this chart. Check this out. So you've got every single day in the stock market, right? And it's every day is an average of the last 20 years. So January 1st, right, or the first trading day of the year, we took the average of the last 20 years and plotted that. Then we went to the second trading day of the year. We took the last 20 years, averaged it together, and plotted that. So it's called a composite chart. And so what we did is looked at over the last 20 years. This is a composite performance of how the S&P performs throughout the entire year. Looks rather bullish, right? I mean, it looks pretty good. Let's take it a step further, though, and break it down. The first part of the year, January through May, okay, looks good. Got a lot of activity, a lot of volatility. The second half of the year, September through December, all right, looks good too. A lot of performance to the upside, got obviously an upside bias, and a lot of volatility. Sweet. What do you have in the middle of the year when they say sell in May and go away? Now you see why they say that. Over the last 20 years, if we look at a composite chart here, it's a whole lot of nothing, right? In the last 20 years, on average, you wouldn't have missed out on a whole lot there over the course of the May through Labor Day period. So instead of just throwing a bunch of numbers at you today, what we decided to do was throw a chart at you and just show you visually the last 20 years on one single chart. If I had an applause button, I would hit it right now. That would be where I would press the button. So I hope you liked it. There you go. There's a May breakdown for you. Let's go over to the sector breakdown. We need to do these shows live so I can hear people like going, woo, 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 a little bit. Can I hear it? That's a one. I got one clap out of it. All right, he liked it. All right, that's nothing to you, man. Programmer guy. You should put together these charts. Anyways, okay, here we go. So sector breakdown. Every sector was in the red today. That's not good news. 8 of them were down over 1%. I'm sorry, that's not good news either. And energy down 4% on the day. That's your worst performing sector. Year to date, energy is the worst performing sector. It's down over 40%, almost 40% there. I think you guys know that. We've been covering that. Financials is the second worst. My God, down 33% year to date. And tech is the best performer. It's just down a touch. Just a very low. It's basically flat. Let's just call it flat. So that's the sector breakdown there. Let's go over to some individual sectors. We can look at consumer staples there, down about 1% on the day. Here you go. You've got Coca-Cola breaking new lows there, recent new lows, not new 52-week lows. So that one's down. Constellation Brands back to the 50-day moving average. That one weighed on the overall sector as well. Cisco, this is the food distribution company, not the tech company. Cisco down 5.25% on the day. That one weighed on your consumer staples as well. And Walgreens broke to new 52-week lows, losing another 5% on the day. If you go over to real estate, remember they had a brutal day yesterday. It was down another 1.5% today. It's not looking good over there. It's your pullback time for your real estate. A lot of the weakness today came in the management space. So if you look at real estate management, property leasing, things like that, CBRE, you probably recognize them, 6.3% to the downside for that one. You got SL Green, almost new 52-week lows there, down almost 10% on the day. Not too good. And Vornado, there it is. Vornado down 9.09%. So anything in that space was the weaker area of the group if you happen to be looking over there. Communication services back to the 20-period moving average. That's going to be Facebook. Facebook down 2% on the day, and Alphabet. Alphabet down 2% as well. Those two make up 40% of the communication services, so we always gravitate towards those when we see weakness or strength. T-Mobile down 2% on the day. Looks good overall, just a bit of a pullback in the short term there. Financials, Financials down to new lows, not looking really good. You had BlackRock. That one tried, right? Up 7% on the day, recovering almost everything that it lost yesterday. It was good. Unfortunately, you got Berkshire Hathaway. We can look at the B-class shares here. Berkshire Hathaway down 1.3% on the day, and JP Morgan as well. Oh, no, come on. JP Morgan as well, lost 3.45%. That makes up 24% of the XLF if you're looking at that one. Regional banks also just a bloodbath over there today. Anything regional. Regions Financial, Zions Bank. Boy, horrible day for them. Even Signature Bank. Look at that one, 8% to the downside. Cool logo, by the way. Let's take a look at oil. Oil. Down just a little bit. It's been quiet over the past few days, so I don't think anybody's complaining here whether you're a bull or a bear. You just haven't seen anything happen. Awfully quiet there. Lost 1% on the day. We were expecting a 4.6 million barrel surplus, right, week over week, and instead we got a drawdown of 0.75. So that was good. I mean, I think oil could have easily sold off a whole lot more today. That news certainly helped out. In the oil space, bloodbath. Oil service stocks down 8%, 8.5% on the day. Transocean, RIG is the ticker symbol. Horrible day, down 20% for them. National Oil Well, down 10% on the day. Halliburton, almost down 10% on the day. That's in that space. And if you look over to the oil exploration stocks, yikes. Same thing, not looking too good. You had three new 52-week highs on the day. You had General Mills. We covered this in a little more detail yesterday, up 1.6%. Humana hit 52-week highs, but did reverse. Yep, 1.6% did reverse. And Regeneron Pharmaceuticals, we talked about a minute ago, 52-week highs, and then came back. You got 10 new lows on the day. Here's the breakdown. Four financials, 3 airlines, GE, and a couple others. So let's go through them real quick. Wells Fargo, that's one of them, 6.2% hitting new 52-week lows there. And Dillow Research, it's still pricey compared to its closest peers, and the dividend yield is now over 8%. May be over 9% by the time this day was done and over with. That's interesting. You haven't seen that in a while. Airlines, you got Southwest Airlines, 5% lower on the day, hitting new 52-week lows. American Airlines, new 52-week lows, lost 5% on the day. There you go. That's the lowest price since their IPO. And it's not like they went public recently. This company's been around for a while. Lowest price since the IPO. It is officially the second worst performing stock in the S&P 500. Delta Airlines hit new 52-week lows as well. This has the best balance sheet out of all the airlines. If you're interested in a fundamental review of that, there you go. That's a quick one. General Electric down 3.5% on the day, almost breaking through the $5 mark. It seemed like it was trying to hover in this area. New 52-week lows today, and a surge of new volumes. People probably using their stop losses inside of that one. All right, we'll go over a few other things, and then I'll take your questions if you have any. Tesla says you can go back to work. Most people are able to go back to work. They're starting to ramp up production there in their California facility, Alameda County. They said, okay, we're going to let you open. You put a big enough fight, we're going to let you open. Uber's to buy Grubhub. They're just working out the price details there, and Grubhub's like, hey, how are you going to pay for us? We know you don't have any money. Well, Uber is going to raise $750 million in debt. So they're going to come back to you, and they're going to try to raise debt so that they can buy another company that not sure they need to be buying. Lyft is also going to, they snuck in their $650 million convertible notes coming out there. Roku is going to be selling 4 million shares. Well, what they did is it's kind of a shelf offering. Basically what they're doing is they work with two banks and they said, we want to be able to sell 4 million shares, but we don't know when we want to sell them. Help us out. And they said, okay. So they now have 4 million shares that they can sell from time to time. That was their quotes, actually, given the little bunny ears I gave you there. They're going to sell 4 million shares from time to time to raise capital. Working capital is what they're looking for there, so that's Roku. Zillow is pricing 8 million shares to sell to you guys for $48 a share. That came out today. All right, a little bit higher than where it's at the moment. $48 a share. Also, they're going to issue $500 million in debt. You getting what's going on here? Money is loose, and people are saying, all right, well, while the money's out there, I better get it because I don't know what's going to happen going forward. Better get the money before money tightens up, and that's what they're doing there. Disney's going to get in on the mix, but they want a little bit more money. $11 billion they're going to sell in debt with maturities from 2026 to 2060, so take your pick. Short-term, long-term, what you're looking for. Disney's going to be offering that soon. Las Vegas Sands down 3% on the day. They are the latest to cancel their Japanese casino openings there. I believe it was Wynn and Caesars that canceled as well. Not sure what's going on there, but they've decided against that. And that's basically what you have there. Allegiant reported earnings today. That's the airline. Also, they're burning through less cash. The stock was higher today. Yep, 6% higher today. They're burning through less cash than they initially said. That's probably the bulk of the good news there. Revenues came in as expected. They beat on earnings by a pretty decent amount there. And I think it's the cash burn thing that was good for them. Let's take a look here. Earnings tomorrow. Allergan, Auto Home, Fossil, Children's Place, I believe, although they may have changed that date. Applied Materials, and Norton LifeLock. You also have 3 Fed members coming out tomorrow and speaking to follow up with Mr. Jerome Powell this morning in his speech. Dividends, ex-dividend day. You got Whirlpool, $1.20, Honeywell, 90 cents, Smuckers, 88 cents, and the new Raytheon Technologies paying out 48 cents. How about that? How about that? I'll take a chance here and try to answer your questions if I can, and we'll go from there. I see this is a little bit delayed, so I'm going to hit the refresh button so I can see your questions here. Seems like it's a little delayed. I'll try to answer your questions if I can, and remember, just be detailed with me. Help me out a little bit. And maybe YouTube's having an issue there. Yeah. I guess the biggest thing from today that I noticed was before yesterday and today, you had the tech stocks were just pulling everything along, right? And what we saw the last 2 days is tech stocks, they started positive. Even today, they were positive on the day, and then they got dragged down. So they're starting to get dragged down on a day-by-day basis. So it's obviously not looking good for that, if you're looking for those to lead the way. You think bearish head and shoulders? Yeah, I've never seen, well, I mean, I've seen this, but you have more people on both sides, right? Just pushing. They're on TV just constantly. You got somebody on there going, this is overvalued. Then you have somebody else going, no, this is the deal of a lifetime. There is definitely an argument about whether the glass is half full or half empty. That's for sure. What do negative interest rates mean? It's not good. It would be the short answer. We don't want that, despite what the president says, and a lot of other people say too. I don't think we need it. If the Fed can do whatever they want with miraculous money that comes out of nowhere, then just let them do that. But basically what it means is you would now be paying the bank to keep your money in the bank, so it'd be better for you to take the money out of the bank and go use it somewhere else. That's a tough one. They're kind of forcing you into the market and forcing you into spending your money. Yeah. Oh, yeah. Let's see. Sorry about the thing. It's I'm not sure if these are like the most current questions, because it seems like you guys are referring to something else. What would it take for the financials to rally? Yeah, I got a couple of those emails today, and I responded to each one of them the same way. I'm like, put some caffeine in their drink or something? I don't know. You got to get Wells Fargo to take a break here and from selling off, and you got to get anyone to believe that there's a bottom, right? You don't have that right now. Not all the banks are considered super discounted at the moment. I see from a price standpoint they look oversold, but I think a little bit lower here, especially on Wells Fargo. Into the teens, I think you find people that are interested in that stock there, unless something changes. Is Disney a good option for the short term? So in the short term, you've got a stock that's now made its first lower high. So you don't want to necessarily be the buyer when you got your first lower high after a tiny little uptrend. And if I can pull it up, I'll show you. Yeah, okay. So you've got to bounce off lows. That looks good. You got a series of higher highs and higher lows, which defines an uptrend. So you could argue, all right, I'm playing momentum. However, now you've got your first lower high. So from just a pure technical standpoint, you've seen that the sellers are starting to win in the short term. I don't think I'd want to walk into something like that until I had a little more confidence, personally. You think the FANGs will pull back 20%? It would be a piece of cake for them too. I mean, obviously they have the volatility there. It's very normal. 20% though, let's see if something from highs, that puts Facebook down back around 170. That's a big drop. Obviously, you're going to have a significant drop in the market if things like that happen. So I think it's too early to say that that's a possibility because that means a pretty significant drop. 20% on Alphabet. Where does that put you? About $1,135. I think it's possible, but not. I don't think you see like crash type movement like we did before. Yep. Can you explain the Roku shelf offering? See, yeah, I'm sorry if I'm reading old comments here, but blame it on YouTube. Shelf offering for YouTube, for Roku, is the equivalent to them knowing they're basically getting money while they can. So what they're doing is saying, we want to sell 4 million shares. We don't want to do it today, and we don't know that we need the money right now. Not only that, we don't know that we need to sell 4 million shares all in one shot. So what we want to do is take 4 million shares and put them on the shelf. And we just want to file all the regulatory paperwork so that when we're ready, at a moment's notice, we can take 500,000 shares and sell them without filing any additional paperwork with the SEC. Otherwise, if they were to say 500,000 we want to sell right away, and then a month later another 500,000, another 500,000, each time they have to fill out paperwork, they got to wait for the bankers to do it, they got to pay the bankers and everything. So they're basically just saying, we don't think we need more than 4 million shares. We'd like to hang on to them. We won't sell them, but we want the ability to sell them just at a moment's notice without getting regulatory approval from the SEC. If that helps. Do you ever place market orders or always limit orders for stock? Well, I don't know if you're asking if one is right or wrong versus the other. If it's a very liquid stock, a market order doesn't matter, right? If it's something like Apple, you're going to get filled at the offer. You're not going to have to worry about it. If you're placing a market order on a stock that is very light, very thin, they would call it, you wouldn't do that there. You want to do a limit order there. So it depends on the volume of the stock overall. If it's one of the more major popular stocks that have plenty of volume, that's no problem these days. Everybody thinks they're going to get ripped off, and even if you do, it's to the tune of like 1 penny. So it may not make a big deal. Yeah. There you go. Shelf offering, almost like a pre-approval for a loan. No, it's like almost a pre-approval for many loans, right? Think about it. This is a horrible example, but I'm going to try it. So imagine if you needed 10 loans, and you could either apply for one today and get it, apply for one next week and get it, the one next week and the week and the week and the week after. Eventually, the banks are going to see that on your credit report and go, what are you doing, right? We're not going to give you this loan. So instead, you just offer apply for a loan for the total amount, and you tell the bank, I'm not going to spend it all right away. I'm just applying for one loan, so I pay you guys one time, you check my credit one time, and I have all the money. I could spend it at a moment's notice, but I know I don't need it right now. So maybe that's a better example. Yeah. I don't think the question was on options. If you're playing options, then of course, limit order on those. It should be defaulted on your platform, to be honest with you. If they allow you to do a market order, change that setting in your platform when it comes to options. Then you don't ever have to guess. You pick your price, you get in, pick the mid price or whatever you're going to do, and be fine there. Taindra likes these big caps tech stocks to pull back. I agree. You know, even a little pullback is more than fair on some of these stocks that have had a great run, you know. United Foods just blew it out. Earnings were great. They blew it out. Earnings were great, and they even raised their guidance going forward, which you don't see that very often. I think we did a chart to show how many stocks actually raised their guidance. Yeah. Oh, yeah. I gotcha. Okay, I'll wrap it up there. I think we've done good today. I see some of you guys chatting with each other. I love that, man. That's cool. Got a little little community here. That's what YouTube wants, right? So we make a little community, and somehow the algorithm shares us with the world, and it's a great thing, right? All right, enjoy the rest of your day. Thanks for stopping by, and have a great night. We'll see you tomorrow.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.